Greetings traders, my name is Timothy Hellberg. I'm a professional trader since 12 years back, and today I'm bringing you a market report in collaboration with IMG FX, the people's broker. We're doing this for week number 16, so it's the upcoming week that we are heading into, and I will run through the different scenarios that we could be looking for. But before I do, let me just quickly mention that this is not a recommendation to buy or sell anything. As always, pause it, read the disclaimer if you want to, but to sum it up easily, do your own research, don't just trade on what someone else says, and more importantly, what I'm going to talk about today, use it as a insight into the markets rather than a fixed scenario, because markets change and so do analysis and predictions, and that's something that we're going to talk about today actually. So the agenda for today will be that we will look at the economical calendar, what events are we looking for during this week. We'll talk about the current market sentiment and potential shifts to look for. We'll also talk about last week's calls, what worked and what didn't, but generally the themes are becoming clear. We'll talk about Bitcoin, where maybe the pullback is done, who knows, let's just see the chart. We'll talk about gold, where the longs are going again, as I've spoken about many times before so far this year. We'll talk about the euro and the problem with the eurozone and how you can benefit and trade it. We'll talk about two trade setups to end the session with Pound Aussie and EURNZD. So let's get right into it and start with the economical calendar. And today we're using Forex Factory's calendar. We have a pretty thin week, so we're not going to spend too much time on it. We are starting with the Easter holiday in most European and some Asia Pacific countries. But what you can keep an eye out for is that we get GDP quarter on year for China. So that's a big one. Now, issue with China is that they manipulate their figures, but it's still important to watch. Let's see where GDP ends up and how they are bouncing back after COVID. Some guidance on the New Zealand dollar late that evening, but don't bet too much on it because Governor Orr isn't always the most flamboyant speaker, so to say. If you need a good sleeping pill, that could be it. Tuesday, not much going on. Wednesday, you got CPI for the Canadian dollar, which is important to look for from an inflation point of view because everything is about inflation these days. Same goes for a CPI quarter on quarter for the New Zealand dollar. Later during Thursday, we have some talks. We have a talk for Bank of England, so for the Great British Pound. We'll have a talk from the ECB President Lagarde for the Euro, and we'll have a talk from Fed Chair Powell. So a lot of central bank talks there, but once again, not something that I would personally just trade on, but important to see if anything important is said. Then we ended the week with some German figures that are interesting, and that's pretty much it. So pretty thin economic calendar, especially coming off the last calendar where we had the ECB a little bit disappointing the markets, but more on that later. So if we look at market sentiment and we jump into, as you know, we like to check the VIX, the volatility index. As I was talking about last week, I was expecting this to pick up a little bit. It didn't really do that. We got an initial little spike, but then not too much after that. The VIX is keeping into the lower regions of the latest stride, but still higher than the lows. We are still elevated from the lows that we are used to see, but not elevated to anything aggressive at all. So the market sentiment right now is that it's 100% fixed on inflation. Inflation is becoming an issue around the world. Doesn't matter if you're in Europe or if you're in the United States, everywhere it's becoming an issue. And that makes it pretty easy for you guys that like to look at fundamentals out there, because when it comes to economical data, it's only revolving about inflation. So if you're new to macro or fundamental analysis, or if it's something that you've been doing before or just want to learn more about, this is the perfect time to do it, because it's more straightforward than it usually is, because it's all about inflation in China, inflation in Europe, inflation in Asia, inflation in Asia Pacific, inflation in the United States, etc. It's all about inflation everywhere. Markets are 100% fixed on it. And more importantly, what the market is looking for is, are central banks managing the inflation? So, as I said, the euro is lagging a little bit here, because we had last week the ECB and they didn't really go very aggressive. Now the United States Central Bank, they have already hiked rates, and even though they hiked rates and they are pricing in further hikes, the markets are still thinking that the United States Central Bank is behind the ball, that they're moving too slow. Now the ECB comes out and they don't go aggressive at all. So leaving room for very much disappointment in terms of inflation and not managing that inflation. Talk a little bit about the Eurozone and what the problem is there further down in the agenda, but basically from a macro point of view and from a fundamental analysis point of view, what you need to keep an eye out for is anything that's tied to inflation. And then if you see signs of inflation running away from the central bank in that country or in that zone of countries. And that's pretty much the easiest way to do fundamental analysis at this point in time. So if we take a look at last week's calls, we were talking about, for example, euro dollar, and euro dollar broke down. We were looking for euro dollars to maybe start getting bullish, but it broke down. And why this is important is because if you go back a couple of market reports ago, I was talking about these levels in the euro, just looking at it back here, thinking it would go lower, and we didn't, and we started moving higher. So then naturally we started looking for a breakout to the upside. This is very important to point out, that never ever fall in love with your analysis or or your bias with a currency, because if you look at the latest couple of market reports I've done, I've talked about going long the euro and I've talked about going short the euro. So the reason why I've talked about that is because I don't really care if the euro does either. I'm going to trade it in either direction. So even though I was looking for bullish breakouts last week, because we had this bullish move to the upside, when we start moving down again, that starts confirming my analysis from a couple of weeks ago, making that analysis very, very interesting. And if you remember that analysis, I was talking about euro dollar making a move for parity. So we are heading into the lower regions of this support zone, and it's very important to watch it from here, because if we break lower through here, you can really see euro dollar fall off a cliff. Am I expecting the euro dollar to do this in the upcoming week? No, I'm not. So my preferred scenario for euro dollar would be to trade it to the upside. But with that said, we are looking at last week's calls. So last week's call was looking for a bullish breakout. We didn't get that, and there's no reason to get stuck in a bullish trade here, because the price action and the fundamental outlook confirmed our analysis from a couple of weeks ago. So you gotta be ready to change your bias when something changes in the markets. You can't just get stuck in one way of looking at it. The second thing that we looked at was EURCAD. And EURCAD on the other side worked out very well. So we had this bull run that I was talking about as a potential short setup, and then we started moving downwards from there, and we finally got it. So if you took this trade, that would have been awesome. If you didn't, then so be it. We also talked about Bitcoin. We said either we go up or down, doesn't really matter. I didn't have a bias for the pair. We moved down pretty hard from those levels, but not gonna dwell on that one. However, as I was talking about gold, I was talking about I wanted to see this consolidation break to the upside. We got that. As long as these two levels were holding, I'm long biased on gold. With the current inflation issue going on around in the world, I still love gold from both technical and a fundamental perspective. So I actually longed gold last Monday on 11th. You're going to see a screenshot coming up on your screen right now. And still holding that trade to the upside. I'm thinking we should make a run for the $2,000 per ounce level. So last week's call on gold was a great one. So with that said, let's jump into Bitcoin for this week. So what are we looking for in Bitcoin? Well, I'm going to sound like a broken record because once again, we have broken back into this larger pattern down inside this big pattern. We're down to the lows again. We're holding the moving at the long moving average. We still have this confluence of supports. So it's, you know, as long Bitcoin is like this at the moment, it's a great risk indicator. So if risk appetite is growing in the markets, then you can look for longs. If risk appetites are slowing in the markets, if the market is getting nervous, you can look for shorts. Either way, I still like this level here. I like to go long off this level. Nothing has changed my bias on that. But I don't see it moving to the upside of the channel until we have a more convincing break or some kind of pattern out of this structure right here. So, you know, preferably, I would love to see this break up, make some kind of flag before it moves higher. That kind of pattern would be great, but we'll have to see if we get it. Until then, don't really have a long or short bias unless we're talking more long term. I do like it long off these lows. Now, into gold, as I said, like it long, already am long, as long as we're holding these two support levels, 1915 and this area between 1896 and 1885. As long as we're holding these two levels, I like it long. I think we should see $2,000 per ounce moving upwards, maybe even higher. And the dollar index is in a very interesting position, so we could see the dollar pull back, not changing the long-term perspective where I still like the dollar, but we could see a short-term pullback in dollar because it's a little bit overbought. And if we would see a weaker dollar, that would also propel gold higher. So I think there's a good case to go long gold. If you're not already long gold, as I am, then go on the lower time frames and look for whatever long entry that you would need. Okay, so next up, let's talk quickly about the euro and the eurozone. So the issue with the euro is that, as I mentioned, inflation is going rampant around the world, and central banks are trying to keep up. The issue that you're having with this is that it's very hard for the European Central Bank to do this because you have all these different countries in the eurozone that have different inflation readings. If you're in, for example, the United States, you only have inflation in the United States to care about, so you can accommodate the monetary policy according to just that country. But in the Eurozone, you have to accommodate your policy to every single country in that zone. And that becomes an issue when you have countries where inflation is pushing 8, 9, 10%, which is insane. In other countries where inflation is lagging a little bit more. So it's really hard for the ECB to act determinedly on their monetary policy at this point in time. And for that reason, there's a big risk for the ECB to end up behind the ball, meaning that they will have to panic hike rates in order to keep up with inflation in the larger economies. And when doing so, the smaller economies might take a hit. Either way, nothing of it is good for the euro. So with that said, I would look for inflation readings out of the eurozone and pair that with how the ECB is handling that and how the market is interpreting that handling. As you can see from the latest bearish decline in euro dollar, the market is not liking what the ECB is doing, and I think we'll continue seeing that. Short term, we can of course have pullbacks in a different price action. But with the inflation going on in the eurozone, the issue for the ECB to manage that inflation, and the geopolitical risks in the eurozone with Russia conducting war against Ukraine, I think there's not much to like about the euro at this point in time. That can of course change, but I think it's a good time to look for shorts on the euro. Let's round this market report up with looking at some trade setups. So actual trade setups. We have pound Aussie. This, as I spoke about in last week's market report, long pound, a strong pound, is seasonally. So seasonal trades is where you look at a certain period of time where you find a pattern in a currency where it moves in one way more often than not, and it has to be a lot more often than not in a certain period of time during the year. So for example, that's why I've been talking about gold, going long gold ever since November last year. So pound is seasonally a strong buy in April. And if we look at pound Aussie, it has taken a major hit due to the surge in commodity currencies, with the Australian dollar getting much stronger. Now, however, we have this inverse head and shoulder pattern here. So we have a shoulder and we have a shoulder, and it's already getting going from that shoulder, and we had a head. So from here, it would be natural to see this make a run for at least 178, which is a good couple of hundred pips to the upside. But I wouldn't mind seeing this run all the way up to basically the 180 levels up here. So, you know, with that said, I think these levels are important to look at in pound Aussie, and I think you have a good technical setup that supports long trades. I think you have a good seasonal setup that supports long trades. So, you know, you're really starting to move into a good trade. Go on the lower time frames, look for whatever entry criteria that you're using, bullish or divergence or whatever. But keep in mind that, you know, short term things can change, but and not one setup is perfect. But I think there's a lot talking for this trade to make a run to the highs, and I think there's the only risk that you're having to this trade at this point in time is a continuing surge in commodity currencies. With the current surge that we've had in commodity currencies, it wouldn't be completely crazy saying that they are all overbought and seeing a pullback in commodity currencies, making pound Aussie moving higher. So I think that's a good trade. I like it. Next up, EURNZD. We are kind of on the same page here. Commodity currencies being overbought. We have the same similar chart setup as to pound Aussie, where we've had this huge commodity surge, and now we're getting into the overbought territories for the New Zealand dollar, pushing this pair higher in my opinion. Additionally, in what we call a fair value, is that when you have commodity currencies, they like to move in these kind of tight consolidation patterns, because the market likes to price the commodities according to fair value. We don't really have a fair value. We don't have that tight consolidation. So I would want this pair to make that consolidation, and it's not giving me indications that it's going to make that consolidation in this lower region. So additionally to that, what I just spoke about with the euro getting weaker and not much to love about the euro, I think this is the perfect hedging play. So if you're going to go short the euro against other currencies, I think this could be the play, the hedge that you're going to take in the other direction, where you're actually going to focus on long euro as a good complement to potential short euro trades. So for me personally, I would see this pair either go up into this region right here, which is not a huge trade, and we would start to see this consolidation pattern in there. That could be one scenario, but it's still a decent amount of 200 pips in this range, depending on what kind of how much you get in the range. Or we could see it actually move all the way up into this fair value area up here, which is a lot of pips. Either one of them, or we just end up in a new fair value area in the middle. Either of them are from a statistical point of view, when you're talking about fair value trades, more likely to happen than the pair breaking lower and making a consolidation pattern, and it's not showing any signs of making a consolidation pattern down here either. So it tells us that the market is not liking the consolidation down here. So with all that said, the statistics are on your side. Is it a perfect trade? There is no such thing as a perfect trade, but you have a lot on your side in this trade, so I like it. With that said, that's it for me this time. I hope you guys have a green and profitable week. Hit the thumbs up on this video, follow the channel, leave a comment if you got something that you want me to bring up in the next market report. I will gladly do it. Until then, I hope you guys have a green and profitable week. Stay safe, guys. Bye bye.